So here we are. SCHD remains battered down by almost 4% over the course of the month and a staggering 6.07% year to date, meaning it fell from the highs of $80 per share to the lows now of $70 per share, which doesn't seem like a whole lot. I mean, after all, that's only about $10 of a difference. But I'm here to say when a fund like SCHD falls like this, it is time to buy. So let's not waste any more time and just get right to it. Now, we all know why we're here. We're talking about the Schwab US Dividend Equity ETF, or SCHD as it's most commonly referred to. It's a fund that is solely there to track as close as possible the total return of the Dow Jones US Dividend 100 Index, to which it ultimately invests right into dividend stocks that are completely selected for their fundamental strength relative to other dividend stocks. And it's all based on financial ratios. Now, why did I right off the bat share with all of you that SCHD fell from $80 per share to $10 per share at a $10 difference, and that's actually a substantial difference and an incredible opportunity? Simple. Because SCHD is investing into some of the safest companies in the market, meaning it really shouldn't be down by this much. But all things considered, it comes down to fear, and fear always takes over when uncertainty runs high, which is what we've been experiencing now with investors who are betting that a dovish Fed will come about, yet that's yet to happen, with a hawkish Fed only talking more about higher and higher interest rates for a prolonged period of time. However, let's now pull up SCHD's fund profile, where we're going to see 105 total holdings totaling over $47+ billion in assets under management. But now have a look here at the sheer quality of the stocks within the Dividend Gold Find. We're talking about Amgen and AbbVie, industry-leading healthcare giants that are among the largest healthcare companies in the world, followed by Chevron and Broadcom, Merck, Pfizer, Cisco, Pepsi, Texas Instruments, and Verizon. All companies that I am sure that you've heard of before, and therefore don't feel any real need to further go into detail about those companies, but allow me to just show you through the safety of the fund as we run through the sectors that most of the holdings are in within SCHD. We have industrials making up about 18% worth of the holdings, followed by healthcare at 15.6%, then financials at another 15%, consumer staples at 13.14%, with IT being the fifth sector worth double-digit size within SCHD at 12.5% worth of the fund. Yet despite the total safety and reliability of this fund, as we saw, it's down over 6% on the year, which means that it's been oversold because investors fear. And while it has already begun to rise once again, the time is now to double down on this fund, investing into SCHD for the longer term. I'm talking about the next 5 to 10 to 15 years. Because holding SCHD over the longer period of time, well, one, you're not going to have to worry much other than about dollar cost averaging into the fund. And two, you're simply going to enjoy the returns because we're talking about a $10,000 investment 10 years ago that would have now rewarded you $27,385 in your account. Now, why SCHD out of all the funds out there? Well, for someone who really doesn't fare well with stock market volatility, SCHD has you covered. Or if you're looking for total reliability in terms of steady growth, of course, SCHD has you covered there too. But SCHD is really ideal for all dividend investors who are interested in not only share price appreciation, but dividend income, as it has one heck of a dividend track record with 11 straight years worth of dividend growth at a whopping 13.69% growth rate with a current dividend yield at 3.7%. All meaning that you're going to get safety and reliability while more growth than some of the, say, dividend investors' top craved dividend stocks. But I will share with you that SCHD does come with a little bit of a price tag, though small nonetheless. Its expense ratio coming in at 0.06%. That means that for every $10,000 invested, you're going to be paying $6, which I think is well worth the investment in SCHD. But now I want to know your thoughts, whether you think SCHD is a buy, if you've been buying more shares, or if you have a better fund of choice. Drop all those comments down below, and of course, be sure to subscribe to never miss a single dividend stock opportunity.